Hi guys, I hope that you are good today. So today we're going to be looking at Meta platforms, which is also known as FB or Facebook. So without further ado, let's get into the analysis. So I've got my monthly chart open, and the first thing that I can see immediately is that we had a very big W pattern over here, with this being the first leg, price going up to the neckline, then coming back to form the second leg. It's actually an overextended W formation. Just for illustration purposes, I'm just going to show it to you. Let's see. This was the first leg, that was the second leg, then price came up, and then this is what we saw, right? With the neckline being at this level over here, right? Let me just remove those drawings quickly. So as I usually say, guys, that when it comes to M&W formations, the expectation is that once, especially in this case where we had a W formation and price went up, the expectation is that price should come back to the neckline. I'm just going to plot the neckline just for illustration purposes. This would be the neckline of the, sorry, let me just change the color of this neckline. I'll make it a pink like this. So this would be the neckline of this W structure over here. Some of you may say that not only do we have a W structure, but we also have or rather an inverted head and shoulders pattern, with this being the first shoulder, this being the head, and this point being the right hand shoulder. Nonetheless, it is still a W formation as well. So I'm now going to add Fibonacci just to see if the neckline aligns with any of the key levels on the Fibonacci retracement tool, just to get confirmation. There we go. So at this point, it doesn't seem that the retracement aligns with any of the key zones on the Fibonacci tool. So I'm just going to ignore Fibonacci for now. So what I'm doing right now is looking for reasons why at this point we should be looking for selling opportunities, because like I said, we have a W formation over here, and once the W formation has formed, the expectation is that price should come back to the neckline to retest it and then head off in that upper direction. So let's continue. Another thing that I can see right now is that price at this level formed an M formation. This level, I'm just going to add the neckline so you guys can see exactly what it is that I'm referring to. Okay, it's also an overextended M formation. Just to illustrate, we could say that was the first leg, right? Price came down to form the second leg, it went up and then came down to this level. However, we never saw a retracement back to the neckline, and that is what we're also anticipating, as we would also expect a movement like this, right? I'm just going to remove the drawing. Okay, let's continue. Okay, all right, let's see. So that's the monthly chart, right? Let's go on to the, sorry, before we go into the weekly chart, there's another thing that I would like to point out, which is that we have here a bullish candle with a very small body and a long upper wick, which tells us that at this level we have what we call liquidity. By that, what I mean is that price at some point has to come to this level, as there is a lot of liquidity stuck at that particular level. I'll just mark it yellow. There go. Then from here I'm just gonna head on to the weekly chart. Let's see, what else can I see? The first thing that I can see here is that we have a candle over here, which is a bearish candle with a small body and a long lower wick. This immediately tells me that at that level, we need to see price coming there at some point to grab some of that liquidity before actually moving up. I'm just gonna put this here for now so we don't forget about it. I'll make it a red color. There we go. Right, moving right along. What else can I see? I'm just looking at this weekly channel, or rather this weekly chart. Let's have a look. As I said in the previous chart, guys, that we have a huge W structure over here, and ideally we should be looking for buying opportunities at this point. However, note that at this level we have a lot of liquidity sitting there, and the market at some point has to come to this level. So let's move forward. Let's see. Okay. On this particular chart, I don't see anything further that is of importance. I'm just now gonna head on to the daily chart. Also, before I do that, there was another small information that formed here with the neckline being there, but that's not important because the bigger structure is this big M formation which we spoke about on the weekly chart. So from here, I'm just going to head on over to the daily chart. Let's see. The first thing that I can see on this particular daily chart is that over here we have a huge gap. We've got a very big gap here, and what this tells us is that at some point price has to come back to this level to fill that gap. And what this means is that, or rather, the reason why price needs to come back to this level is because there is a whole lot of liquidity sitting there, and price must grab some of that liquidity before it actually continues going down. Okay, another thing that I can see at the bottom is we have a small extended W formation here. Let me just do this quickly just to show it to you. We have the first leg, price went up to the neckline, came back to create the second leg, and then went up. Like I said, guys, whenever we have a W formation, we expect price to come back to the neckline in this manner and then head up, right? But we can for now ignore this small W because we have already a bigger W actually on the weekly and monthly chart, which is over here, right? Okay, let's continue. We also have another small W here. If you look at it, small W here, which also has its neckline there, so what we may actually see happening at this point is that price may continue to create a head and shoulders pattern where we have let's do this quickly, where we have the first shoulder, price went up again, then we have the head, then price went up again, then price may come back here again and then push. This may actually be in line with the bigger structure, the bigger W, the neckline of the bigger W we spoke about on the monthly chart. So I think we should be looking for, at this point, buying opportunities. However, we need more reasons why we should be looking for buying opportunities at this level. Okay, let's continue. Another thing that's very important is that we have a gap over here, and price has to at some point fill this gap, right at this level. As I said, that there's a lot of liquidity that's stuck here. Let's continue. Another important thing to note is that we have an information on this particular chart, on the daily chart. And I just want to change colors. Okay, I'll try this one. We have this structure and the neckline over there, and the anticipation is that price has to come back there and then continue going down. Right? Yeah. So for now, I'll just add a neckline so that we don't forget about this particular structure, which is the information. I'm just going to make it a different color as well so that we don't get confused by all these necklines that I've drawn all over the chart. Let's see, I'm just going to make this different color. Let me try something a little bit darker, such as a blue. There we go. Put it over here so we don't forget about the small structure. All right. So what else do I have to do on this particular chart? Let's see. I should be adding a channel at this point. However, because of how the chart looks, it's going to be very tricky to add one, but I think we can do this at this stage. Let me show you. We can do this. Remember guys, when it comes to plotting your lines, whatever line it may be, they have to be accurate, just to ensure that at the end of the day your execution also remains accurate. I'm just going to make it a different color. There we go. All right, that's our channel on the daily chart. And then from here we're going to head to the H4 chart. So far my bias is that I should be looking for buying opportunities at this level, as I said, because it's in line with the bigger structure on the W chart, which is the W that is here, right? So yeah, let me go back to the H4 chart and continue. I'm just gonna fix this line over here. Let's see. There we go. Let me fix the bottom line as well. There we go. That's our daily channel. Then from here, let's see. My line seems to have disappeared at this point, but we know that it's on this level more or less. Let me just go back to the weekly chart to show you what I'm talking about. It's actually here. Yeah, so that's fine. Head back to the H4 chart. All right. So what else can we see by looking at this H4 chart? We have another gap over here, which we know needs to be filled at some point. As I said earlier, we have overextended information here, and we expect price to head back here and maybe continue to this level. We also have a gap over here which needs to be filled. And then the next thing that I'm going to do on this particular chart is add my H4 channel. Let's see. Let's see. For now, what I would do actually is do this. This is what I would do for now. Some might say that the channel is no longer valid, but for now, this is what I'm going to do. I'm going to add one in this manner, and I'll explain why afterwards. As I said, guys, our channels need to be accurate as much as possible to ensure that at the end of the day, when we do execute, our execution is also accurate. Okay, so just bear with me, guys. Yeah, so I would have my channel in this manner. We had the information over here. Price broke both the channel, the H4 channel, as well as the neckline. So the anticipation at this point is that price should let me just do this quickly. So we had this structure, first leg, price went back to the neckline, went up to create the second leg, and then broke the neckline together with the structure, and then the anticipation is that price must come back here. And should it do so, I would look for a selling opportunity at around this level, and my take profit would be somewhere down there, right? That's what I'm looking for. So I'm just gonna wait for price to actually come back to this particular neckline that we spoke about, right? And that's it really for now, guys. I don't see anything else at this stage. I don't see any buying or selling opportunities based on the 4-hour chart. Let me just go to the H1 chart and see if there's anything of value or that is significant that we need to look at. Okay, I'm just fixing my lines. As I said, guys, that we need to make sure that our analysis is as accurate as can be to ensure that at the end of the day our entries are also accurate. There we go. Okay. All right. Yeah, as I said, guys, there's not much that one can do at this point as far as I'm concerned, in my humble opinion. So what I would do so far is wait for price to retrace to around this level, and then at this point I would look for selling opportunities. I'm just gonna add, let me go back actually, yeah, so that's fine. Yeah, let me go back to the H4 chart, and let me try to add Fibonacci retracement to see if price were to retrace based on where it is currently, would the retracement over the neckline of the information align with any of the key numbers on the Fibonacci retracement tool. Let me try that and see, because guys, like I always say, rather, we're trying to find as many opportunities as possible, or as many reasons as possible as to why we are looking for a buy or a sell. That's confluence. There's my Fibonacci. Let's see. Let's see. There we go. So you guys can see that actually the retracement of Fibonacci, or the neckline rather, is in line with the 50% Fibonacci retracement zone, which is a very important, or one of the most important levels when it comes to Fibonacci. So this is confluence number 2, right? So I'm just gonna delete this Fibonacci, right? As I said, guys, for now I think we just need to be patient and wait for price to retrace to this level. Once it does so, then we can look for a selling opportunity at this point. Let me do this just for illustration purposes. Let me just do this just for illustration purposes. Henceforth, just to recap, information, first leg, price came back to the neckline, went up to form the second leg of the M, and then it broke both the neckline as well as the H4 channel. The anticipation at this point is that price should do this. Then from here, we'll look for a buying opportunity at around this level, and then, a selling opportunity at around that level, and then price should come to around that level. That is the anticipation. And my first take profit, I think, should be at this level where we have the gap that has formed, right? Just heading back to the daily chart. Yeah, that would be good, I think, to keep this level as the first take profit. Just to go back to the weekly chart, what may actually happen is that price may actually do this, guys. Form another small W here, come back here, form the second leg of the W, and then the neckline would be here, and then it may do this, then come back to the neckline, and then head back to this area that we spoke about earlier, where we have candle filling at this point, because I said there's a lot of liquidity that's trapped in this area, guys. So that's what may actually happen, right? So that's it, guys, and as far as Facebook / Meta platforms is concerned. If you have any comments or questions, please just let me know in the comment section. And if there are any other charts that you would like me to have a look at, just let me know. Thanks, guys, and cheers.